Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 27th, 2025, and we're diving into the third quarter earnings report of Royal Bank of Canada, one of the largest banks in the world. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Royal Bank of Canada's impressive Q3 2025 results.
Revenue and profitability overview. Let's start with the top line. Royal Bank of Canada reported a net income of $5.4 billion for the third quarter of 2025, which is a 21% increase year over year. John, can you elaborate on the factors driving this growth?
Absolutely. The bank's net income growth is primarily driven by higher revenue in capital markets and increased net interest income in personal and commercial banking. The adjusted EPS of $3.84 also surpassed the forecasted EPS of $2.36, showcasing strong performance across all business segments.
That's impressive. How did the revenue figures look for this quarter?
Royal Bank of Canada reported total revenue of $16.985 billion, reflecting robust growth in their diversified business model. This growth was supported by higher fee-based revenue in wealth management and strong average volume growth in personal banking.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the bank's future outlook. What are the key highlights here?
The bank achieved record pre-provision, pre-tax earnings of $7.8 billion, up 29% from last year. Their CET1 ratio stands strong at 13.2%, indicating a robust capital position. Additionally, they returned $3.1 billion to shareholders through dividends and share buybacks, reflecting confidence in their financial health.
What does this mean for their future outlook?
With a return on equity of 17.3%, Royal Bank of Canada is well positioned to continue its growth trajectory. Their strategic investments in technology and talent, along with disciplined risk management, are expected to drive sustainable performance in the coming quarters.
Segment performance and strategic initiatives. Let's delve into the performance of different segments. How did personal and commercial banking fare this quarter?
Personal banking reported a net income of $1.938 billion, up 22% from last year, driven by higher net interest income and volume growth. Commercial banking saw a 2% increase in net income to $836 million, despite higher provisions for credit losses.
And what about wealth management and insurance?
Wealth management's net income rose by 15% to $1.96 billion, thanks to higher fee-based client assets. Insurance income increased by 45% to $247 million, primarily due to improved life insurance claims experience.
Credit quality and risk management. John, credit quality is always a critical aspect. How did Royal Bank of Canada manage its credit risk this quarter?
The bank reported total provisions for credit losses, PCL, of $881 million, a 34% increase from last year. The PCL on loans ratio was 35 basis points, reflecting higher provisions in capital markets and commercial banking. However, they managed to release provisions in wealth management, which helped offset some of the increases.
What about the PCL on impaired and performing loans?
The PCL on impaired loans was $913 million, up 47%, while the PCL on performing loans saw a release of 20, driven by favorable changes in their macroeconomic forecast.
CEO's perspective and strategic vision. Finally, let's hear from the leadership. What did CEO Dave McKay have to say about this quarter's performance?
Dave McKay emphasized the bank's relentless focus on clients and their commitment to delivering on growth ambitions. He highlighted the strength of their diversified business model and the importance of investments in technology and talent to stay ahead in a rapidly changing economy.
It sounds like a strong strategic vision. How does this align with their long-term goals?
Their strategy is centered around creating value and driving premium performance through the cycle. By focusing on client-centric growth and maintaining a solid capital position, Royal Bank of Canada aims to continue delivering exceptional results.
Key takeaways. In summary, Royal Bank of Canada has delivered a strong performance in Q3 2025, with significant growth in net income and adjusted EPS surpassing expectations. Their robust capital position and strategic focus on technology and talent set a positive outlook for the future. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Royal Bank of Canada's impressive results.
Thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch for more insightful analyses. We'd love to hear your thoughts on Royal Bank of Canada's performance in the comments below. Until next time.